Good evening, everybody. Can't believe we're already heading toward Easter. Trying to think how far past Christmas we are. Hate to say this, but I don't think Christmas is that far away, and here we are at Easter. That's because I actually watched Elf last night, which is always entertaining any time of year, I guess. Oh, Bill, where are you? Denver. All right. Well, that's not unusual for Denver, is it? Okay, we can see what's happening in the market trend. Which is essentially that we have a J-hook pattern. And Bob, I hate to say this too, I think probably within the last 7 days is when Sandy finally brought the last big baskets of Christmas decorations from upstairs. Put them in the storage room. But notice how this J-hook pattern started. Inverted hammer, bullish engulfing signal. Positive trading. That's right. Jace, I've got this Alexa, and I can tell her to play different music. So, whoops, there I just bobbled her right now. I tell her to occasionally play Bing Crosby, which is mostly Christmas songs. So I sit here and say, wait a minute, I'm listening to Christmas music, and it's almost April. But left-right combo after an inverted hammer. Stochastics coming up. I think the same was occurring over here in the S&P 500. Felt or a piercing signal, J-hook pattern. Backed off a little bit today. No, it didn't back up. Colorblind. It actually came up pretty close to the where it opened. But the NASDAQ is the one that's kind of just still sideways. You can see there's kind of a wedge type formation sideways, and we're still trading below the T-line, which puts a very good trading dynamic in this market that not only you want to be long, you can also be short because there's really no, you've got some sectors that are selling off, which are more oriented toward the NASDAQs. Other sectors in bought, obviously, more oriented toward the Dow. And crude oil continues to hover right around the 60, right around 62 right now. Now, I wanted to pull up this chart just to show an illustration. What shows indecision? Dojis. What shows indecision? Indecision. Big down day, big up day, big down day, big up day. That's still showing indecision. So when that's doing it right there at a technical level that everybody's watching, that's where you can get ready for the next move to the upside. I haven't taken a look at gold for a while. And gold's still drifting lower. So with the markets heading in definite different directions, Dow, J-hook pattern heading up, NASDAQ, kind of a wedge pattern at best going sideways, but it may still be in a downtrend. That tells us we want to be very much concentrating on the individual signals or stock charts and or sectors to be both long and short. So when I say concentrate, if we know what the strong bullish signals are, we recommended NBIX last week because of the inverted hammer gap up. Now, you'll hear me say many times, and I hope this sinks into everybody's head, that when you see an inverted hammer and it trades positive, especially coming out of the oversold area, you've got a 95% probability or greater that you want to be going long. Now, the inverted hammer is one of your 12 major signals. It's the least frequent of your signals. But when it does occur, you definitely want to take notice of it. Okay. Some of the other ones we recommended today was RFP because of the bullish left-right combo right off the 50. Kind of a scoop type pattern. I'd still be buying this one on positive trading. Even though it backed off today, if it opens positive, giving you a Doji sandwich type setup, that slingshot effect. Yes, same is true with a hanging man. The opposite of a inverted hammer is when you see that hanging man gap down. That's telling you that's a strong sell signal. Now, obviously, the rhetorical question is, do you always get big, huge moves like this? No, but if you follow what the charts or what the signals are telling you, you're putting yourself in situations where the probabilities are pretty big that you could be heading in a big price move. No, that's not an inverted hammer, and that's not a shooting star. Why is that not, DJ? Yes, an inverted hammer, as far as formation, is like a shooting star. But why is that not a shooting star? There you go. Not in the overbought area. Can a hammer be substituted for an inverted hammer? Steve, it can be, yeah, the hammer and inverted hammer happen at the low end of the trend. The shooting star and hanging man happen at the top end of the trend. The only difference, though, is a hammer signal shows a good reversal. An inverted hammer shows you a very high probability reversal. So is one better than the other? Statistically, I would definitely go with the inverted hammer if I had to make my choice between the two. But the other side of that coin is you're probably going to see 4, 5, 6, 7, 10, 12 hammer signals for every inverted hammer that you see. The previous one in February was, yes, closer to the overbought area, away from the T-line, lower trading next day. This really isn't in the overbought area, obviously. You're not real far right now away from the T-line. Okay, let's see what else we got here. All right. I'm showing this as what you don't do. We got a small position on QuantumScape just because of the long-term potential. But how much QuantumScape should you own right now? The answer is 0. There's nothing on this chart right now that tells you you'd want to own any QuantumScape. So I rationalize saying that small token position I have is more just a monitor to keep track of when this might get moving again. But this is, I'm illustrating this to say, do as I say, not as I do. You shouldn't own any QuantumScape right now unless you're holding it for a long-term situation, not for a trade. Okay, so right now, even though the Dow is going up, very few long positions on. Now, if you were long root, get a bearish engulfing right here at the 34, back to the T-line, the stochastic's rolling over, but what would be your final decision on this one? You stay long, as long as it doesn't close below the T-line, because the ramifications of a fry pan bottom staying above the T-line is still a very high probability situation. Yes. So you stay with it until it does close below the T-line. Otherwise, the probabilities are extremely strong that you're still in a fry pan bottom uptrend. So I don't have too many more. That as far as long positions, I'm going to skip down to another section. However, start watching to buy some of the steels. Now, obviously, the steel stocks are reacting to the new money stimuluses coming from the government to build infrastructure. So the steel stocks are working well. You got Steel Dynamics. Now, Steel Dynamics bought some today, but it closed back down here. Didn't do a sell signal, just closed lower. Still going to use the T-line as a stop, but we'll be buying aggressively if it comes back up through today's open. U.S. Steel, same scenario. Bullish engulfing, right smack dab off the 50, up through the T-line. Kind of a, not a scoop, but just kind of that syndrome or a simulation. You still want to be buying U.S. Steel on positive trading because look at your bigger chart pattern. There's your fry pan bottom. There's your J hook or your cup and handle. Oh, that's Kathy. That's up to everybody. What up to each individual? How far out you want to go. Now, right now, it appears like a lot of these steel companies don't have weekly options, just the monthly options. So I'd be buying April's, which is still how many 4 weeks away. Market is still pretty choppy. Not choppy in the sense that everything's or the all the stocks are bobbing up and down. It's choppy in the sense that there's lots of sectors that are heading down, while at the same time there's other sectors heading positive. And because it's not a real consistent, I'm going to say consistent movement in the markets, that's where you're getting this oscillation where things aren't producing strong trends. They're producing kind of waffling trends at this point. So that's where the T-line becomes your ultimate decision-making criteria. So lots of stocks still in good short situations. With the this situation, I would guess that if this is wave 1, wave 3 is going to take you down to the 200. You said if a stock root opened and immediately traded down close to the position, you said if a stock root open and immediately trades down, close the position. When did I say when a stock opens and immediately trades down? Was that when it was up above the T line or below the T line? Jace? Cal, we didn't do Nile yet. No. Okay. No. No, I see what, Jace, I said if you were buying something and it opens and immediately trades down, you're not going to be buying it. So if I was getting ready to buy right here and it opened and immediately started trading down, I wouldn't open the trade. I would wait for it to get back up through that level. So no, you've misinterpreted what I said. That if you were going to buy a stock and you're getting ready to buy and it opens and immediately starts trading down, you're not buying it. You're waiting for them the selling to stop and come back up through the open. So even if you close this, you probably shouldn't have closed it, but you were better off if you did close it. Now you can watch to see what it does here at the T line. How concerned should we be that, oops, scroll past me. Yes, there's a difference between holding a position and buying a position. And I think what you misinterpreted was if I was buying this one today and it immediately opened or opened and immediately started selling off, you're not buying it. Because it tells you as soon as they opened it, there's sellers there. And where's the place to buy it? If they brought it down and then came back up through the open. That tells you the profit taking over and the bulls are there, or the bulls are back. Root, the earliest, most recent signal for a change in sentiment is March 19th. The earliest signal. Right here? Yep. But no follow-through until gapping up on March 26th. That's true. So maybe you didn't buy it that day. Maybe you didn't buy it that day. You needed to see it open, trade positive the next day. No, wouldn't have bought it that day. What was that day telling you? Probably still wouldn't be buying it. I'd be buying it on positive trading on the next day. Because what was the T line telling you? They weren't closing back below the T line. Was the dimple 2 days before? No, there really isn't a dimple on this one. Which one had a dimple? Ah. BGS. You can see the little dimple right here. And what do we know about the dimple? That if you use the dimple as a halfway point, that if this is where it took how long for this to hit the dimple, from here, that same distance over here as from here to here is where you're likely to see the breakout. So today, so if I was watching this to see when to get in, I could say, all right, it's getting pretty close to here, because it is from here to here. When am I going to be buying? When I see the first strong bullish candle. Not understanding the dimple. The dimple is just kind of a dimple. What do I want to say? Something that breaks the trajectory of this fry pan bottom. See, it's like a little dimple there. Sometimes the dimple is this way. Sometimes it pops up this way and pulls back. A transit. There you go, Bill. Yep. Very well said. Yeah, so it's just kind of, it works like a halfway point of the fry pan bottom to kind of give you a measurement that from here to here, when you get out toward that level, that's where you start watching for a breakout. Okay, did we answer all the questions on root? Today, the bearish engulfing, although above the T9. Is that correct? Oh, that's back over on, what was it? Root. Yeah, there's something wrong with this chart as long as it doesn't close below the T-line. What makes a fry pan bottom? Junky trading. But as long as this stays in this trajectory, your fry pan bottom is still in effect. Whoops, that's why. Okay. Yeah. Let's see, that was back over on which one? On BGS? Yes. Or you could almost look at it as kind of a mini scoop pattern. But then when it comes up and it really doesn't go anywhere, what type of trajectory now are we able to start seeing? That looks like a big fry pan bottom with a dimple in the middle. What is the significance of a dimple? I don't know. It just acts like a halfway point. And the fact, yes, that it gapped right down to the T line, the 200, and couldn't trade below that level. Yeah, so it's kind of a scoop pattern, but then goes back into the fry pan bottom. Okay, let's see. We were on short positions that were setting up nicely. DMTK was one. ADP key. And use wave one, wave two, going into wave three. So a lot of people will say, all right, it's kind of reversed down here. Is it time to buy? And the answer is, well, if you're buying, you always watch to see what happens once you get to the T-line. Kind of a bearish belt hold, a bearish engulfing. What'd that tell us about the T-line? It's still acting as resistance. Now you can look for your next pattern. Oops, yeah, okay, I'm reading everything. So right now, have long and short positions on in the portfolio because you can see the patterns. Call this a bearish J hook. You can call it a dumpling top, but there's no buying coming into some of these. And the biggies, like Netflix, nothing of any great magnitude here. So this is one where you kind of ask yourself, would I want to be trading this one? Just seems like it's caught sideways. No real trend to it. And Amazon, which direction is this one going? Nowhere. Yes, kind of the same feeling on AD or on Tesla. Where would we expect the next target to be? Testing that low, and where is that low? Just right about here at the 200-day moving average. Oh, AT, Kathy, what are we supposed to be asking about individual ones? I'll try to go quickly so we can get to the individual ones. Apple, just going nowhere. Okay, so the ones that we want to look at as far as showing the most strength, general question I will take. When looking to go long or short, do you look at the calls versus the puts at all? No, completely ignore it. And the reason that for that, Brad, is you don't know why people are buying calls or puts. If I'm an institution and I just came in and bought 650,000 shares of U.S. Steel because I think it's going to go higher, I may also go and buy the equivalent number of puts to act as a safety net or insurance. Well, now everybody sees, well, there's a big, huge volume in the puts. That means somebody thinks this is going down. That's absolutely wrong. They're protecting their main position, the stock position. But if something hit it hard, at least the puts would soften the blow. So so you don't look at what's happening on the long or put side. If I hear so many people say, "Oh, something's happening in XYZ," they're coming in and buying the calls. Well, somebody may have just shorted that position and bought calls to protect from it going bad against them. Yes, so they're hedging their position. Many good-looking setups traded like root today in varying degrees. Yes, unfortunately, the varying degrees is a lot less enthusiastic than normal. I say that because when I go through my scans like we did yesterday afternoon, I can go down through the first 100 positions in a matter of a couple minutes. And usually in that first 100, I'll find 5, 10, 15, 20 good trade setups or potential bullish signals and patterns. Well, now I'm doing it, and there's only maybe a handful of good trade situations. So that kind of tells me the market is in a lethargic state and nothing is really running strong. And that's why we're seeing a lot of situations where we've got some bullish charts and some bearish charts that are acting well. So would you buy Vert at this point since it's in the overbought area? Ronnie, did you come to the session yesterday or this weekend? Okay. What do we know about a pattern? A pattern is usually going to break out when you're up in the overbought condition. Where do we want to buy signals? We want to buy the signals when they're in the oversold area. When do we buy a pattern? We're usually buying a pattern breakout when the stochastics are already up in the overbought area. Vert just kind of broke out. You can see the fry pan bottom, kind of the morning star signal, now a break through the resistance level. That's telling you you're probably now heading into wave 3. Okay. Oh, you what? All right. Very good, Nance. Would you buy vert with the sector? Yeah, we're not, if something's happening there, remember what the most important element of our analysis is the signal and pattern itself. Now everything else we can use as kind of a backup. Now, is it better to buy a bullish chart when the whole sector is acting good? Definitely. Or short something where the whole sector is selling off? Definitely. I don't know what this sector is doing, but we can see the strength in this pattern, which is the fry pan bottom breakout. I had to backtrack. I told somebody today I wouldn't be buying this one because it already had a big price move, except then as I looked at it more, there's a J-hook pattern setting up. So what do we expect coming out of a fry pan bottom? A strong price move. What do we expect after a strong price move? A J-hook pattern. So that one's still buyable. And here's where you want to know what your signals are. Your Doji sandwich on Futu. A Doji sandwich that took you up through the T line, closed at the 50. What's the logical entry strategy on this one? It starts trading positive. What's it telling you? They're confirming the Doji sandwich. And what do we know a Doji sandwich tells us? More upside. So if they open this positive, it's confirming the Doji sandwich, and it's also telling us the level that everybody is watching is now being breached. Now they'll start coming in also. So the Doji sandwich, let's see, is this a symbol or did it, this my bad? Yep, that's my bad handwriting. There's a Doji sandwich on HOL. What's our strategy here? Well, if we were buying on positive trading tomorrow, you definitely want to see what happens here at the 50, which is also right at a resistance level. So it's another case of adding 2 plus 2 to see what the rest of that move will be. Here's ACCD, was a good short. Had they broken down through this level? Well, that's what we were watching, and they did a bullish engulfing signal. Now a Doji sandwich. Now what's our analysis of this chart? Not a bearish J-hook pattern, but now a double bottom. So that's the same analysis as we see a bullish J-hook pattern that comes back up to the top of the little previous high and fails. What do we have? We have a double top. So that's why we have a much more clear decision-making process that if we see this type of signal at a place that it was supposed to be breaking down, now we've got a different view. Now we're looking at a double bottom. Now it's followed by a Doji sandwich. What's the Doji sandwich tells us? Expect more upside. Whose handwriting is this? RLGT. Another Doji sandwich. Not quite a scoop pattern, but definitely telling us there's probably a bottoming action going on here. There's your Doji sandwich, J-hook pattern. And it starts off with a Morningstar signal and an inverted hammer. What type of pattern is that? There you go, a McMuffin. Based on training over the weekend, I signed up for TC2000 and really love how easy it is to add charts to a watch list and speed scroll through them. So that's what I've got on that system is the 50 or the 62 charts that are oriented toward the electric vehicle sector, I've got that all in one watch list. So how do we know when one of those is acting well? Because we do the same technique. When we update the charts and we sort by which ones have had the biggest percent price move on any given day, we can start right at the top. And if there's one that has a big move, we can quickly go back and see what caused that move. But all those are on one watch list. Oh, that is true too, Raymond. I didn't even notice that. Morningstar signal. I'm sorry, a J-hook pattern. Morningstar, Doji sandwich, McMuffin, kind of a bobble breakout. Got all the elements of more upside. Okay. What's that one got going for it? This is where we have convergence analysis. Kind of a Morningstar, not a real Morningstar signal, but a Morningstar type signal. Bounce right off the 50, close above the T line. Kind of a mini scoop pattern and a slingshot effect breaking through or gapping up through the resistance level. Got more upside. Not really. Well, yeah, I would call that a kicker type signal. There you go, Brad. Yep. Kind of a scoop, yes. But if you add everything together, bounce off the 50, a Morningstar type signal, a kicker type signal, a scoop type signal, it's still giving you the visual. And the visual is kind of adding all this together to see the flat trading, and then a scoop type pattern, at least putting you with probabilities that you're in the right direction. Our VP, not a scoop pattern, but notice your Doji, bullish confirmation. If this opens positive tomorrow, you've got a good buy signal in here. What else can you add to your visuals? The fact that you're doing a double bottom. And APLS, Doji, best friend gap up. Where's your next likely target? At least coming back up to test the 50. Oops, I skipped a whole section here. What am I doing? I hate when I start drinking this early at night. There's your J-hook pattern. Look how you started with it. Best friend type gap up, another gap up. Who was it? Was it Brad or Gary over the weekend said, I don't like to chase after stocks that have gapped up. Remember what a gap tells you. They're coming in with great enthusiasm. If you're coming off a signal and they're gapping it up, that means there's a lot of bullish pressure. Okay. All right. It must have been Gary. Oh, that was you? Okay, Jace. Yep. So if I start seeing gap ups off of signals out of the oversold, that's telling me I want to get in this pretty quickly. And that's what should deter your hesitancy to get into a stock that has already gapped up. If it's coming off a signal, it's telling you that's bullish confirmation of a signal, not that you're chasing after it. EPC, a perfect J-hook pattern. I got to put a little star next to that one. Ruh-roh. Oh, looking at the J hook happening right here. This is observe the obvious type situation. Kind of a J hook pattern, comes back, uses the 50 as support. When people see that it's acting as support, what is a lot of investors doing? They're thinking, oh, this is acting as support. It's not going down. They start jumping in. We can see it's acting like a J hook pattern. Will, that's where you decide where is the best place to put your stop after a gap up. And I'll try to find one as we go through here. There's also a bobble breakout. Yeah, there's a bobble breakout here, but remember what normal human reaction does? If they come up through a resistance level, they'll come back and test it to see if it's going to act as support. Yes, so that's a bobble breakout. Oh, it's because we know of double bottoms, Winnie, it's just like anything else. Other people are watching it because if there's a double bottom, it basically tells you, I forget which one was where a double bottom, but it's basically telling you the bears knocked it back down to the original bottom and the bulls step back in again. The bears finally say, shoot, the bulls are still here. Let's start getting back out of this position. So double bottom's just, whether you want to call it, it's not any, I wouldn't call it a Western technique or an Eastern or a Japanese technique. It's just kind of one of your patterns that work fairly well. Let's see. You've got VST. I have VST written. Oh, it's way down there. Yes. So where's your bullish engulfing signal occurring? Right at the same level that your hammer signal occurred. So what's the obvious? This is the area that somebody's planning on buying. So it just adds a little bit more credibility. Oh, ACCD. Oh, is that what did we just do? Oh, we did ACCD. This, yeah, that's kind of a double bottom. Look at your morning star signal, and right about the same level, you're getting a series of Doji. So I had this one further on down the list to say when you see that series of Dojis, and again, right at the same level it bottomed out before, that becomes a higher probability that you're starting up. No, I don't have an individual watch list for each sector. Individual watch list I have right now is the one for the electric vehicle sectors. Just one individual watch list for all your stocks. Oh, yeah, I put on different watch lists. I've got my individual, what I call portfolio watch list, and that's all the ones that we've recommended. So, and as long as they're acting well, they stay on that list. Obviously, if we've bought something and it's moving up, it stays in our portfolio watch list. If something doesn't work, every couple of days I clear out that watch list to get right back to the ones that are actually still in existence. Yeah, we don't know that for a fact, Mike, until it does do a bullish signal. For all we know right now, we've got a wave 1, wave 2, wave 3 bringing us down to the 200. So if there was a strong bullish engulfing signal here, yeah, you could then perceive that that was a double bottom setting up. What were we working on? We were working on J-hooks. Facebook. I don't trade Facebook because it's just not a great trader. But right now you've got a J-hook pattern that if you like this one, you could be buying it. Campbell's soup. Same scenario, but this J-hook is probably more the classic pattern. Your big fry pan bottom, J-hook pattern. And what do we have as a major advantage for identifying a J-hook pattern? The T-line. And see what it does at the T-line. You'll start the next track or next move up. Yes, on TC 2000, you can do it either way. And we'll have to do a scanning session again. But on TC 2000, if I brought up U.S. Steel and said, oh, that looks like it might be good, and then I bring up Schnitzer and it says, oh, that steel company looks good, now I can click on the symbol and it will pull up that sector, and I can click on it and it will pull up that whole list of stocks in that sector. Now I can do my scans of like I would before on any stocks, that now I'm just looking at that sector, sorting it by the same thing. Which ones had the biggest percent move today? So which ones look like they have the best charts? You do have an affinity for Campbell's soup. Oh yeah, I like Campbell's soup. Didn't you all grow up eating chicken noodle soup or tomato soup with a grilled cheese sandwich? Gary, I had at one time, I guess they had the Morningstar grouping. And yes, yeah, I've seen that one. I lost my train of thought. Oh, on TC 2000, there was a Morningstar sector grouping that I used where I would just click on that and sort by which sectors had the biggest or the best chart patterns. But now all of a sudden I don't have that sector. When I pull it up, it just pulls up the normal stock list. Animal crackers in your soup. Yeah, I've got the Morningstar industry groupings, but when I click on it, I don't get the I don't get sectors. I just get stocks. It doesn't go to the sectors anymore. And still wait until we do the double line. Now I'm way lost here. And CXW, another J-hook pattern. Okay, and some of the golds, this gold is working well for some reason. AU, let's see, did we do VIST? VIST was doing the double bottom. We're watching CHPT because of the dojis down here, inverted hammer doji. Now I say we're watching. There's nothing here on this chart yet that tells us we want to do anything, but if it does another 3-4 dojis, we get ready for a cradle type pattern. Okay. So did we do the steels? I can't remember. Schnitzer, but this one, you still want to be buying. BBL. If this opens positive tomorrow, setup, strong chart setup. SID, also in the steel mining sector. Looks like it's bottomed out and starting back up. And we had recommended SXC, another one that didn't really confirm today, but if it opens positive, you can be buying it. Now on the short side, again, there's still some good shorts if they open weaker. APPN. Oh, darn. I asked the trivia question today. In which episode did William Shatner say, "Beam me up, Scotty"? And I didn't see anybody that had the answer. That's because the answer was they never said it. No, none of them. They never said, "Beam me up, Scotty." It was the same thing as which story of Sherlock Holmes did he say, "Elementary, my dear Watson, elementary"? He never said it. It was a commercial back in the 30s or 40s. Yeah, see, you learn a lot of stuff in here, Mike. So GSX, this is kind of your Doji rule. If you're in a downtrend, you see a Doji and they're opening lower, stay with it. Candlesticks and more, that's right. So that was the same scenario as our big profit move on Viacom. When it came right down here to the 50, not quite in the oversold area, but it was doing a Doji, indecisive right here on the 50. What'd that tell us? If it opened positive, they were supporting on the 50. If it opened lower, the Doji rule told us they aren't supporting at the 50. Look for more downside. Now, this is one of those rhetorical ones saying, did we expect it to go from here to here? Definitely not. We're shorting it based upon the hanging man gap down, the gap down. Told us we're in the right direction, probably at least heading for this area. Yeah, I guess the margin calls are what not only the margin calls, but weren't there a couple big hedge funds that are in trouble right now because the value of this one had dropped so drastically? So there's your kind of your little double doji setup. Where do you think your next likely target on this one is? Probably down here to the 200-day moving average. This one's already out of the barn, but look at another factor that you always want to look at is the bigger the signal, the more compelling there's a change of investor sentiment. $20 billion, all right. And CODX, there's your bearish doji sandwich. So this is where I like to find charts. Some days you're going to find lots of charts that are getting ready to go bearish. Like a bearish engulfing signal right smack dab at a resistance level. There's going to be some charts that have a bearish engulfing signal, but they're not doing it right at a level that everybody else is watching. And API, what type of pattern are we looking at? Wave 1, wave 2, dumpling top, looking for wave 3 to the downside. So Again, this isn't rocket science. This is just using the charts, the patterns that tell us that Sally is probably, is anybody else having breakups? Sometimes I'm hemming and hawing, but I try not to keep my voice from breaking, from breaking. So Sally, sometimes when that happens, just click on the red X up at the top right hand of your screen, log off and log right back in, and you'll probably get a better connection. So FT, I don't understand what that, I forget what your question was. All right. CYTH, would you consider that a bearish cradle or a bearish cradle? Yeah, I probably wouldn't have looked at it at that as that. No, remember what a cradle pattern is. It's a bunch of indecisive trading. Those are decisive candles. That's your bearish signal, is your bearish left-right combo. And VUSI, that's kind of your bearish flutter kicker. Now here's another element of your analysis that will improve the probabilities that you're seeing things moving in the direction you expect it to. Where did the positive trading each day move to? Pretty much right smack dab to the T line and then failed. So that's additional evidence that the bears are still in control. There's probably more downside. Every time they come up and hit that resistance level and start selling off, just the opposite. Every time they come down and hit the support level and trade up, that means the probabilities are you still have more upside. And Gann, another kind of Doji rule. GII came up to the T line and did an evening star signal and closed right here on the, or just below the 50. What's a logical trading strategy here? If it opens lower, you could be shorting it because they're showing you every time they've come up, there's a sell signal. They pop back up, there's a sell signal. Who do you think is winning? The bears are winning. And who do you think everybody, or what everybody thinks right now? The bears are winning. So they're going to start selling this off. Could this be your next likely target? Could be, but at least you know there's probably better prospects right now that you're heading lower. And MVIS. On your failure here at the 50, where's your next likely target? Could be all the way down here. Now, when I say could be all the way down here, when they start selling something off, what happens to investor sentiment? People that are long saying, oh man, they're still selling, let me close this out. And it kind of adds that speed to the downside. Selling, and it gets faster, ACMR. So here's your 2+2. Came down, bounced up off the 200 with a little kicker type signal. If you were short, what would you have been doing? Obviously covering your short. Then what happens? Well, they don't seem to have a lot of enthusiasm or energy to get up through the T lines. What type of pattern are we seeing? There's your dumpling top, just the opposite of a fry pan bottom. Now you're sitting right here with a doji. What would be your next analysis? They open this lower. What's our doji rule? They're going to trade it lower. What's that tell you about this level? They're not holding it anymore. On the other hand, if they open it positive and start trading positive, what's it telling us? This area right in here is acting as a support level. But this has a great setup to go short just based upon the doji rule at a level that would tell you there's more downside. Same scenario. SKT, I guess one of the REITs. And kind of an evening star signal failure right here at the T-line failure at the 50. Where's a next likely target? Down here. Now, why would you make that a target? It looks like it's selling off. If the first support level was 12% away, okay. If your next support level is 50% away, that makes it that much more compelling to go after that chart that's looking weak, or with the bigger potential chart looking weak. Okay, so we were in cattle today. This is the cattle on the June contract. Any pattern you can see on this one why you would be long June cattle? Anybody? Anything more specific about that J-hook pattern? There you go, Winnie. There you go, HB. Yes. Look at where it bottomed out. A morning star signal. 1, right on the 50-day moving average. 2, it closed above the T-line. 3, it was followed by kind of a doji sandwich, McMuffin. So what do you got going on here? Stochastics heading up. They bounced off the 50. You're in an uptrend, and now they've broken out through this level. What can be assumed? Cattle prices are still going up. That's right. No, I'd rather have people look at something and think about what they're seeing versus me just giving the answer. Because once you start analyzing, say, yeah. And now, it's not because I was any great wizard. At one time, I started saying, well, this combination is, I've seen this before, and it has a good reaction to it. Did you swing trade your live cattle? I did. Today on the 10-minute chart. Oh, I stayed long over the weekend. Not because I intended to, but because you guys had me talking past 2:05 on Friday afternoon, and I forgot to close the trade, or I tried to close the trade and missed it by 3 seconds to close out the trade. So that meant I would watch to see what it did today. Started coming up, just stay long, stay long, stay long. There was the first sell signal. I closed out the trade right in here. And then I got ready to go back in here, and it didn't do anything, so I closed it out. Do the contracts settle in delivery of live cattle at expiration? I don't know what that question means, DJ, but right now, the delivery for April, you don't trade April's because it's too close. So most brokerage firms will say, all right, your front contract right now is May. Because obviously They don't want people screwing up, or when it gets close to when the contract ends, somebody that has already sold cattle and you've bought or you had, let's say you sold some sorted cattle and somebody decided they wanted to put them to you, well, they're going to more than likely do it when you get closer to expiration. So that's when the brokerage firms say, all right, now your front month is May because nobody's going to make you buy May cattle this far ahead of time. Yeah, when I was in college, I was within about 15 minutes of owning a train carload of Maine potatoes. And okay, so right now this market is still in a dichotomy, I guess is the word. The Dow and S&P are heading up, and the Nasdaq is moving sideways to down, which just gives you a quick analysis to say, all right, some of the tech stocks are still being sold off, and some of the Dow-related stocks are still heading higher. So at least that way, because we don't know whether they're going to move this market up strong or move it down strong, if you have longs and shorts that are working, you'll probably, if the market all of a sudden turns one way or the other, you can close out your long positions while your shorts are still working, or vice versa. If the market all of a sudden skyrockets, you cover your short positions, and during that time, your longs are still working. Okay, so with that, are there any general questions on candlesticks? You pick out your strategy. It's not a function of whether you're in big cap or mid cap or smaller ones or ETFs. It's analyzing which one of those areas have the best chart patterns. So if you break it even down to sectors, if you go and you look at the steel stock sector and it looks like that's just starting up on a J-hook pattern or coming out of a fry pan bottom as far as a sector indicator itself, that means probably those stocks in that sector are going to have a longer term hold time frame. If you're holding stocks and you want to hold them longer term, you might exchange or extend your analysis to a combination of the daily chart and the weekly charts. Now, because I don't hold things long term, my idea of long term is if I've held something for 30 days, that's excessively long. I am still working on when I get a free weekend day to go through and see what indicators you can put together to make for a little bit more solid long-term evaluation. Who pays for the delivery? Oh, that's the industry, Will. And so somebody's just delivering. Remember not to get too involved with it, that if you're being told that you're going to own a carload of cattle, it's probably cattle that's already at the feedlots. But that becomes now more of a physical process, which you don't want to be in that physical process. You just want to be trading the paper. Oh, Rick. Rick, were you in our weekend session? and you don't know what the difference between a bearish harami and a dark cloud is after all the time we spent on it, a dark cloud opens above any of the previous day's trading and closes more than halfway down that candle or the previous candle. Let's see if I can find a bearish harami someplace. Sure, there's one somewhere. Yeah, not quite. A bearish harami opens below the previous day's close. Anybody think of a good bearish harami? A bearish harami opens below the previous day's close. It's like you've got a green candle in the overbought area or at the top. The next day they open it slightly lower inside the previous day's close, and they close it above the previous day's open. I'll try to find one. Rod, yes, email abraham@candlestickforum.com, and he'll send you the slides. You should have gotten the can on 318. There's a bearish harami, yes. A bullish candle, and then it opened below where it closed and closed above where it opened. It's in an inside day. Yes, the mouse pad is a good way to learn the signals. Was that LDOS? Was that a bearish harami? No, I don't see it, but it's a good J-hook pattern. All right, so Rick, go back through the 12 major signals section. That is your bread and butter. On 3-2, yeah, that's a bearish harami, except that wouldn't be called a bearish harami in the sense that you're down here. You want to see a bearish harami occurring when you're up in the overbought area. I could not get anything trying to use the site Jim sent out. Jim, you have an answer to that? After the second weekend, after the weekend class. All right. I'll have Jim get. Pretty, two parameters. If I was buying on that day, because it was confirming, where would I not want to see it close? I wouldn't want to see it close below the halfway point of that candle. That would tell me the bears are still in control. If it had, during the day, had enough selling strength after that buy signal to come all the way back down through the open, I close out during the day, because if this is a bullish signal, there shouldn't be enough selling strength to take it back down through the beginning or the open of that bullish signal. So the bully or the open of a previous or the bullish candle that told you the bulls were in control is the stop during the day. A halfway point is at the close of the day if it closes more than halfway down. Mike, that might be a way to do it too, is copy the link and put it in a fresh browser. What is February 22nd? Doji and gap down signal. That's a go Doji gap down signal. That's your bearish best friend signal. All right. So here's the important thing for everybody that participated in the weekend session. If you have questions, this is where to be asking them. If you're not real clear on something, you'll probably see it over and over as we keep going through charts. Or, as somebody said, I'm not real clear. Mike said might not be real clear on stop losses. We can do a session specifically on stop losses on a Wednesday night. Oops. Now, Cal, we haven't done the double line yet. Okay, any other general questions on candlesticks? If not, Jim, let's go ahead and do the double line. And in 2.8 seconds, do the next double line. Greg, didn't we do Facebook? I'm just speed reading those. So NIO, there's nothing here. So what's your question on NIO? Right now, you wouldn't be long or short. If you're short, you can stay short. I wouldn't be shorting it here, but I wouldn't be going long. ITW, dividend tomorrow. That really doesn't affect the price all that much because that's already built into the price. The Russell 2000. Like the Dow, I'm sorry, the NASDAQ, having a hard time getting up through the T-line. So still kind of a bearish mode in the small cap stocks. AGNC, you would stay long as it stays above the T-line. Probably be paying or trading that more on the basis or holding on to that more on the basis that pays a good dividend yield. AMRN, nothing yet. You did have a piercing signal, double bottom. Now if it opens positive, what it tells you about your T-line. The Doji rule says they're not support or resisting at the T-line, more upside. You could go short on this one. You just have to be careful that you're not now in kind of a sideways wedge. I'd probably be more apt to go short below that low just to make sure it's breaking out of that support area. EOS kicker signal closed below the halfway point of the previous candle. If over 50, the T-line stay with it. Yes, your kicker signal is still your strongest indication. You don't have a sell signal. I think technically, well, maybe it is can't tell where it opened, but you give it another day. It came back to test the T-line, or I'm sorry, the 50. Definitely want to see it open positive tomorrow. ATVI, kind of a fry pan bottom. Now you want to watch to see if it can break out through the 200. Didn't we do root? Root, you stay long as it stays above the T-line. Toll Brothers. That's kind of junky. Now, you're not in the overbought area, but you have a bearish engulfing signal occurring where? Right at the same level they topped out before. That would be a good implication. Yeah, if it opens weaker tomorrow, you're stuck sideways. And CTXS, bullish engulfing. It's still not a real vibrant chart. You've got a kind of a left-right combo. You probably don't want to pay attention to it until it does break out through this level, which means you could buy it if it starts breaking through the high of today. And so to go long, you definitely want to see that break out through this area. NMR. If you were long, as far as going short, I don't know whether you can. Yeah, I guess you can. It's still above $5. You could go short on that. And then you could go short. Now, obviously, you got a support level here, so you need to see it really start breaking down. Or if you go short, just want to make sure it can get through that level. And Capri, that one you get ready to go short if it opens lower tomorrow, because it obviously has failed with an evening star type signal. When I say evening star type signal, it's got the characteristics of an evening star, big up day, day of indecision, big down day, but it's not doing it in the overbought condition. But it's still telling you the sellers are in control. That's telling you if they open this lower, they're kind of confirming that the sellers are still controlling that trend. Harmony, you could buy this one. I'd be more apt to buy it, though, if it breaks up through that level. Whoops, hang on. AGI, nothing yet. You have a Morningstar signal, but you haven't confirmed yet. Has to show some good strength from here. Ben I thought it looked pretty good today. What? Ben Franklin. Yes, so you got the J-hook type pattern with a Doji sandwich type pattern that wasn't strong like this. But if it opened positive tomorrow, it's telling you it's breaking out after these gap ups. You can be buying it. Kind of a Doji sandwich, but not a real good trend to it. If you like it, you could be buying it. You just have to make sure it can get eventually up through the 50-day moving average. At home, you get ready to short this one on weakness. Big evening star signal, gap down, failure at the T-line, failure at the 50, making the likelihood of the next target being down here. Let's see. Adjust microphone. Yep. Okay. Sorry about that. And Citigroup, probably wouldn't be long or short this one. There's just nothing there right now to tell you which direction they want to take it. Hey, Matt, if you're long, you stay long. I wouldn't go long until it breaks out again up here, so you need a positive open tomorrow. This one, I would not be long or short. If you are already short, you can stay short, but I wouldn't be long or adding any new positions. Rare play, likely to have high weight in RAKX, the new space ETF starting to trade tomorrow. Well, more than likely, if it's starting to trade tomorrow, they've probably already accumulated that stock to be in there, I would have thought. Oh, that's, yeah, what's her name? Yeah, never forget what's her name. This one, I'd be more apt to be short. Definitely would not be long. Short setup at this point, yes, you could short this on weakness. When you get into these lower price stocks for shorting, you just have to make sure the volume is pretty hefty so that they've got availability of giving you that stock in any brokerage firm. Boeing, I'd be a buyer of this one on positive trading after your big bullish engulfing and then close above the T-line. AGMN, AMGN, stay long, J-hook pattern. INVU, not coming up here, but did I type that correctly? Lee, we did this one, didn't we? That's a bearish engulfing signal, but your rule of a fry pan bottom is you stay long as it stays above the T-line. It's still a pattern. Visa, you could buy it if you like it. It's just not going to make you a whole heck of a lot of money. It's just not a very exciting stock, but it's heading in the bullish direction right now. And XLU, nice J-hook pattern coming off of these signals. Now you got the breakout. You stay long on this, expecting wave 1 and wave 3 to be the same. RFP. You want to be buying this one on positive trading. Now, if this open lower and starts trading lower, I'd probably close it out because that means you're still not out of this sideways mode. GSK, that's a good looking chart. Another one you could be buying. When they do a buy signal here at the 50, what's everybody's outlook? Up, they're supporting at the 50. Where's my next target? Probably heading for the 200. I mean, everybody that's trading that stock and sees that it's supporting on the 50. I'm sure we did Facebook, a J-hook pattern. You could buy it if you like it. It's just not one of your best trading stocks. And Red Robin, there's your bearish left-right combo. So you got a couple factors on a left-right combo. One, it's one of your strongest reversal signals. And two, look where it's occurring. Right at the same level they topped out before. If this opens lower tomorrow, you close it out. It wouldn't necessarily go short, but it wouldn't be long in it. No, not a mini cradle. It's buyable, yes. Oh, cradle. I'm thinking of scoop. Now, it's not even a mini cradle. A cradle you'll see is a definite flat trading. That's just more of your bottoming action. And where's it occurring? Right here at the same level it bottomed out before. So wouldn't call it a cradle, but it would still be a good one to go after as far as a buy on positive trading. Electronic Arts, more of a fry pan bottom. You can stay long on this one. Matador, nothing. Wouldn't be long or short. And CPE, if this one opens lower, would not be long or short. Boeing, we did, right? Boeing, you can buy on positive trading tomorrow. NRG, that one, kind of a morning star signal. There's your hammer. There's your inverted hammer. There's your morning star. You could be buying this one. Expectation, it's probably coming back up at least to the 50. An SRAX, I guess my answer would be, if you like it, you can be buying it. You just want to make sure it can get out through this this trend level. So if you're buying now, you use a T-line as your stop. You just want to make sure it gets up through Whoops, that's the wrong one that I asked. Oh, no, we're not. Did I skip one? SRAX. Yeah, that's where we're on. Yeah, if you're buying it, it has to get out of this trend channel. We did NRG, right? Yes. Boston. Oh, that one you could be buying. A bullish Harami. Breaking this downtrend. Figuring it's coming back up to this level. So you could be buying this one. Gaps. Bearish J hook, you don't know that yet. Yeah, that's really just a nothing chart to try to anticipate what it's going to do from here. Are we going to get recording an email on the weekend webinar? You should. Or, yeah, Thomas, were you in the class on over the weekend? So GPS, too early to tell. Now, I'm hoping that everybody that was at the weekend training got enough repetition to tell you when things were setting up and what to anticipate. And you know what the big disappointment was, FT? You weren't there. You would have gotten a lot of information. GGCB. Oops, that's not coming up. Sound is low. Okay. Mike moved. I hope I moved it back. Kathy Wood, yes. No, not to show my ignorance, but why is Kathy Wood supposedly so famous? UPST. That gets a little bit iffy. So here's an important analysis. If it opens positive, trades positive, you got a J hook. If it opens lower, you've got a drifting sideways move. All right. On space. Left-right combo is an engulfing, Matt. The only difference is it's engulfing a doji. And remember, anytime we have a doji involved with a multi-time frame signal, it acts a little bit more compelling. So a doji followed by a bearish engulfing is your bearish left-right combo. A doji followed by a bullish engulfing is obviously your bullish left-right combo. And they are very powerful in the sense you don't have to see confirmation. If I'm in an overbought condition and I see a bearish left-right combo still above the T line, I'll close it out because the probabilities are pretty strong that it's going to go in the opposite direction. Wonder why our RGB is not a short. You don't have enough telling you that there's strong selling yet. I mean, you're still in an uptrend. You have a sell signal. If it opened lower, I'd close out long, but I wouldn't necessarily chase after it for a short because there's plenty of other better charts right now that are showing good confirmation for a short. Verizon, you just stay long on this one. Yeah, I would have thought you would have gotten the recording with the in an email today. Oh, because she made 20% on her recommendations last year. Oh, that long-term hold. Oh, John, Jim, is there do we have a list? I thought the list was down in the folder of the electric vehicle stocks. This is the only classes. I think we'll do one Thursday night. Now I'll take a survey. There are enough people wanting to stay around on Thursday night to do a session with Friday being closed. Is it best to enter on a J hook after the close above the T line or a signal? Usually a signal, but hopefully you've got a signal at the T line. You can purchase the, you can purchase the training and just get the videos. That means you can watch, what was it, 16, 17 hours when you want to. The only disadvantage you have is if you had a question right then or on something, you wouldn't be able to ask it, but that's where you can come back and say, hey, I looked at the video. You had a chart that showed such and such. What's the, then answer or ask your question about it. TGH, confused, potential double doji, or is there any signal? Now, a double doji usually is a doji. That's more of a shooting star type thing. So that's telling you that's kind of lackluster. If you have stayed long, it has to open positive and trade positive tomorrow. If it opens lower, that shooting star right here at this level tells you, move on to something else. Okay. Kathy Woods was a Tesla bull before the launch, and she's a big bull on fintech, biotech, robotics, and AI. All right. Okay, well, that's all right. Oh, does she? Oh, she has the ETFs. Okay, that might be more compelling. BBL, yes, stay long, and if this opens up positive tomorrow and comes up through Friday's close, you want to be buying aggressively. That's your information that the bulls are definitely in control on this one. Okay, guess we got them all. She's an investment advisor for, okay. Oh yeah, wow. It's 10:40 or 9:42. Gee, yes. So, Mike, this is why I always kind of am hesitant about. I always ask the rhetorical question. You know who the best analyst is on Wall Street? And there's a very simple rule that if something is good on Wall Street, everybody knows about it. If there's a good analyst on Wall Street, you wouldn't sit here thinking, no, I don't know anybody that's really great on Wall Street. It's because if somebody's good 1 year, they don't, very rarely do you find somebody that is good year after year. The only person I can think of in the past was John Templeton, who ran a fund. Yes, Milton. So that's exactly why I don't advocate somebody saying, oh, like somebody just said, Tesla might be up to, what was it, 4,000 by 2025. For all we know, between now and then, Tesla might just be another car with electric power. There might be 4 dozen other vehicles out there, makes, that are making electric vehicles. So Tesla wouldn't have any major part of the market. And you might have people like Ford or GM making them so efficiently and so much cheaper than everybody else that you wouldn't even bother buying a Tesla anymore. Very far away, yes. You can't ever tell. Tesla double charged their customers for deliveries. Yeah. Oh, on SID, it's just one of the mining stocks. Whoops. That for mining. So you could be buying this one, expecting to come back up here. I still like this one the best because of that gap up. I think that could come back up to your $65 area pretty quick. Okay, way past everybody's bedtime. So we'll see everybody bright and early tomorrow morning. We'll see you then.